Schools teach us a lot of subjects like math and literature, but they often leave out an important one: how to handle money. It might seem strange that we spend years learning about things like triangles and classic stories, but we don't get much education on managing our finances. However, knowing how to deal with money, such as making it, saving it, spending it wisely, and investing it, is crucial for getting through life successfully. It's like there's a secret lesson about money management that we're expected to figure out on our own. But don't worry, we're here to help fill in those gaps. Over the next few minutes, we'll talk about important money topics that schools usually don't cover. We'll discuss things like understanding credit scores, figuring out taxes, learning the basics of investing, and even how to start your own business. So let's dive in and explore these 15 essential money lessons that schools often miss teaching us about. Starting with number 1, entrepreneurship. It's like diving into an adventure. You might have learned about big changes in history, like when machines changed how things were made during the Industrial Revolution. But did anyone tell you about the time when people started their own businesses and changed the way we live and work? That's what entrepreneurship is all about. It's not just about opening a store or making something to sell. It's about taking an idea, like making a new kind of toy or starting a service like dog walking, and making it real. You have to tell others why your idea is awesome. That's called marketing. And when you work for yourself, you need to be smart about money. You might not get paid the same every month like in a regular job, but if things go well, you could make a lot more money and have more freedom. Being an entrepreneur means being brave enough to take risks, even if things don't always work out. It's about trying new things, making something that people really want, and being in charge of your own money. So cheers to all the dreamers and doers out there. Entrepreneurship isn't just about starting a business, it's about being the boss of your own money and future. Number 2 on our list is all about setting financial goals. Imagine goals as your map guiding you to financial freedom. They show you where to go and how to get there. But here's the thing: people often forget about them. In school, we learn about math, science, and chemistry, but setting and reaching financial goals? Not so much. Picture yourself sailing on a big ocean without knowing where you're headed. That's like trying to manage your money without goals. It's not enough to say, "I want to be rich." You need to decide what rich means to you. Is it owning a home, retiring early, or exploring the world? Once you know where you're going, you can make a plan to get there. But setting goals is just the start. Achieving them takes work, a plan that includes budgeting, saving, investing, and sometimes making sacrifices. Always remember, a goal without a plan is just a wish. At number 3, we're talking about understanding insurance. Now, insurance might sound like just another bill to pay, but it's way more than that. It's like having a safety net for your money. Think about it this way. When you buy insurance, you're not just getting a piece of paper, you're getting peace of mind. Health insurance helps cover big medical bills if you get sick or hurt. Auto insurance helps pay for damages if you get in a car crash. Homeowners insurance protects your home if something bad happens, like a fire or a storm. And life insurance helps take care of your family if something happens to you. These are just a few examples, but they all show how insurance helps keep your finances safe when unexpected things happen. It's like playing a game where you try to lower the chances of something bad happening to your money. So remember, insurance might seem like something you can skip, but it's actually really important for keeping your financial future secure. Let's talk about number 4, credit and debt management. Imagine your credit score as your financial reputation, a 3-digit number that can either help you or hurt you. It's not just about getting approved for a loan or credit card. Having a good credit score can mean paying less interest on loans, getting better deals on insurance, and even having more job opportunities. Now on to debt. It's not always a bad thing, despite what some people might think. Debt can be a useful tool, like when you take out a mortgage to buy a house, borrow money for college, or start a business. But the key is managing your debt responsibly. That means understanding the difference between good debt, which helps you in the long run, and bad debt, which can get you into trouble. Good debt is like investing in your future, such as getting an education that can lead to better job opportunities. Bad debt is more like buying things you don't really need, especially if you can't afford to pay for them right away. Managing your debt well involves making payments on time, keeping the amount you owe low, and having a mix of different types of credit. Understanding how credit works is the first step to taking control of your finances and feeling more confident about your future. So let's take that step forward together, shall we? Let's talk about number 5. Taxes and tax planning. Taxes can be scary, but they're not as scary as they seem. Understanding taxes is really important, not just because tax time can be stressful, but also because it's important for your overall financial health. Schools might not teach you everything about taxes, but here's the basics. First, you need to know how to file your tax returns. It might sound hard, but it's not as bad as it seems, and there are lots of places to get help if you need it. Then, there are tax-efficient investing strategies. These are just ways to organize your investments so you don't have to pay as much in taxes. So let's take the mystery out of taxes together. Remember, taxes are less scary when you understand them. At number 6, it's time we talk about investing. Investing is essentially a way of putting your money into things you believe will become more valuable over time. It might sound complicated, but let's simplify it. Imagine you're planting seeds of money, and you hope they'll grow into bigger amounts later on. These seeds can be things like stocks, bonds, mutual funds, and retirement accounts. When you buy stocks, you're buying a small piece of a company, showing that you believe in its potential to grow and make profits. Bonds, on the other hand, are like lending money to either the government or a company, with the promise of getting back your money plus some extra as interest. They're considered safer because of this promise. Mutual funds are like baskets filled with a mix of different investments, giving you a diverse portfolio without having to pick individual stocks or bonds. And retirement accounts are special savings accounts designed to help you save money for when you're older, often with tax benefits. Overall, investing isn't about luck. It's about making smart choices to grow your money over time and secure your financial future. Next at number 7, financial literacy. Financial literacy is like having a blueprint for your financial journey. It's the foundation that guides you in managing your money wisely. Imagine trying to build a house without knowing how. That's what handling your finances without financial literacy feels like. Let's break it down. Budgeting is like having a fitness tracker for your money. It helps you keep tabs on where your money is going and ensures you're staying within your means. Saving is akin to squirreling away acorns for winter. It involves setting aside a portion of your income for future needs or emergencies. Investing is how you grow those saved acorns into a bigger stash. It's about putting your money into things like stocks, bonds, or real estate to make it grow over time. And managing debt? It's like keeping the wolves of interest rates and late payments at bay. It's about handling loans or credit card balances responsibly, so they don't become overwhelming. Having a basic understanding of these concepts is key to achieving financial independence. Remember, it's not just about how much money you make. It's about how well you manage and keep it. At number 8, we delve into basic economic concepts. Let's imagine you're at a busy market where sellers are trying to sell their goods. This is like a real-life example of economics. Now let's break it down into simpler parts. First, there's something called supply and demand, which is like the heartbeat of the market. When many people want to buy something but there isn't much of it available, low supply, the prices go up. But when there's lots of something available, but not many people want it, high supply, the prices go down. Then there's inflation, which is like a sneaky thief that makes your money worth less over time. After that, there are interest rates, which is the cost of borrowing money. When interest rates are low, it's cheaper to borrow money, which encourages people to spend more. But when interest rates are high, borrowing money becomes more expensive, so people tend to spend less. Finally, there are central banks, which are like the bosses of the economy. They control things like how much money is available, and they set interest rates. Understanding economics helps you to make smarter decisions with your money. At number 9, we explore real estate. Exploring real estate isn't just about finding a nice place to live. It's also about investing in properties, which can be an important part of your overall financial plan. Real estate investing offers the potential to earn money through rental income. and the appreciation of property value over time. However, being a homeowner comes with responsibilities such as paying property taxes and understanding the details of mortgages. Speaking of mortgages, they're not just loans, they're powerful tools that can either help or hurt your financial well-being depending on how you manage them. If you're thinking about buying or selling a home, knowing the process can save you from stress and disappointment. It's like playing a strategic game where each decision can impact your finances in the long run. Whether you're renting out properties, buying and selling for profit, or simply looking for a place to live, having a good grasp of real estate is crucial. It can serve as a solid foundation for your financial future. Number 10 brings us into the fascinating world of financial psychology. While it's not commonly taught in schools, it's incredibly important for how you deal with money. So, what's it all about? Financial psychology is understanding your beliefs, attitudes, and behaviors towards money. It's realizing that how you spend, save, and invest is influenced by your emotions and past experiences. Have you ever wondered why you treat yourself to shopping when you're stressed? Or why you're scared to invest even though you know it's smart? That's your financial psychology in action. By understanding these behaviors and where they come from, you can work to change them. It's about shifting your mindset from potentially harmful to helpful when it comes to money. Remember, how you think about money isn't just about what's in your bank account. It reflects how you see yourself and what you want for your future. Your mindset about money can either help you succeed or hold you back. At number 11, let's talk about the importance of being ethical with money. Ethical finance is about more than just how much money you have. It's about being honest, fair, and responsible in all your money matters, both personally and professionally. It's not just about making money. It's about how you earn it and what you do with it. Ethical finance is like a foundation of trust. Without honesty and integrity, the whole system falls apart. Being honest isn't just a good idea. It's the only way to ensure lasting success. Integrity means sticking to your principles, even when nobody's watching. It's about doing what's right, even when it's tough. And accountability is key too. It means taking responsibility for your financial choices, whether they turn out well or not. Every decision you make with money has consequences, so it's important to own up to them. In the world of finance, ethics should always be a guiding principle. It's about doing what's right, even when it might be easier to cut corners. When ethics and finance work together, everyone benefits. Number 12 is about managing financial risks. We've learned a lot about growing our money and securing our future, but what about unexpected challenges? That's where risk management comes in. We'll explore different ways to handle risks and how insurance can help. Whether it's health insurance or home insurance, these tools can protect us from big unexpected bills. But it's not just about insurance. We'll also talk about having a backup plan, like saving up for emergencies. Managing risks helps us stay strong financially, so when tough times come, we can bounce back and stay on track with our money goals. Life is full of risks, but if we handle them well, we can stay financially secure. Let's learn how to navigate these risks and build a stable financial future. Remember, it's not just about making money. It's also about keeping it safe from losses. We've covered a lot in our journey through finance, but this is just the start. Financial knowledge is super important. It's something we keep learning about our whole lives. The main thing to remember is that you're in control of your financial future. Investing in yourself by learning and growing is the best thing you can do. So, keep learning, keep growing, and take charge of your money future. Next, at number 13, we're talking about generational wealth. This is basically about the money and assets you pass down to your kids and grandkids. It's like leaving a legacy behind. When we talk about passing down wealth, it's called intergenerational wealth transfer. This can happen through things like giving money in your will, giving gifts, or setting up trust funds. But how do we make sure our money lasts for future generations? That's where estate planning comes in. It's about deciding who gets what after you're gone and setting up legal stuff to make sure it happens. Estate planning isn't just for really rich people. Anyone can benefit from it. And the secret to keeping your wealth safe? investing smartly and spreading your money out in different places. Remember, it's not just about you, it's about the legacy you leave behind. At number 14, we're exploring the exciting world of global financial markets. Now that we've got a good grasp on managing our own money, it's time to learn about how money works on a bigger scale around the world. We'll dive into topics like how different currencies are valued, how countries trade with each other, and how big world events can affect the financial markets. In today's world, what happens in financial markets far away can still affect us personally. Whether there's a money crisis in Europe, a big tech boom in Asia, or political changes in South America, these events can create waves that reach us, impacting things like our investments, job opportunities, and even how much we pay for things like coffee. Understanding global financial markets opens up a world of opportunities for us. It helps us see the big picture, so we can make smarter choices and take advantage of trends happening worldwide. So let's go on this journey together. Remember, the world is full of financial possibilities. The more we know, the more power we have to make smart decisions and reach our financial goals. And lastly, at number 15, let's talk about retirement planning. After exploring the global financial markets, let's zoom back into our own financial journey. Retirement might feel far away, but it's really important to start planning for it early. It's not just about saving money. It's about thinking ahead to what kind of life you want when you're done working, figuring out how much money you'll need, and choosing the right retirement accounts to help you get there. We'll look into things like 401ks, IRAs, and other ways to save for retirement, understanding how they work and how to make the most of them. We'll also talk about spreading out your retirement savings in different ways and the role of Social Security benefits. Planning for retirement is a big part of being financially independent. It's about making sure that when you're ready to stop working, you can enjoy your later years without worrying about money. But remember, retirement isn't just about reaching a certain age. It's about having enough money saved up to live the life you want without depending on a job. So let's dive into this journey of retirement planning together. The best time to start planning for retirement is right now. This is your chance to shape your future and make sure that when the time comes, you can retire on your own terms. Cheers to your financial freedom and prosperity. Remember, the journey to financial success may have its ups and downs, but with the right knowledge and mindset, you can overcome any challenges and reap the rewards along the way. Keep learning, stay focused, and you'll pave the way to a brighter financial future. I recommend you watch the next video in our series. Don't hesitate to share this video, subscribe to our channel, and share your thoughts in the comments section. Thanks for watching.